So Kevin,
Bye. See you tomorrow, guys and girls.
although the World Series has concluded with Houston beating the Dodgers, I think their first World Series victory in history. Thank you for pinch hitting and coming in today, and looking forward to hearing your voice and taking a look at some of your looks and your charts. And here we are. Hi, Kevin.
Hi, good morning, Dale. How are you?
Great, buddy. Thank you for stepping up and coming in today, and also returning.
Hey, man, not a problem. I'm glad to be here.
So what caught my attention when I was just, looking at Twitter was you had a nice little tweet with a lot of COT data.
Mm-hmm.
So, we've been talking about COT, that, it's great to know what commercials are doing, but, they have very deep pockets. They could be real early and it doesn't matter to them because a lot of it's a hedge anyway. It's not a spec position. And so I'm curious what's lining up with what you're seeing in COT and what is corroborating that with technical action. So it looks like we're starting with oil here.
Yeah, I just have the oil chart open. Would you like me to open up some COT data? And
you're the boss. Why don't we start here with oil? So, everyone's starting to pay attention to it. It looked like we had a weekly breakout, mm-hmm. and we're following through to the upside. Although I gave up on this scenario, I was looking for 62 for quite some time because that was the top of a weekly falling wedge. And gosh, we're almost there. So what are you seeing up here? Ripe for profit taking?
It's perfect for profit taking because we're hitting a weekly supply area over here. This area here, we're hitting some supply. So I'm expecting a drop from this area on the weekly down to about the 58 level.
Okay, that was kind of like the breakout area, right?
Yeah. So
okay.
this 58 level is a weekly demand zone because it was responsible for removing a weekly supply zone back here, right here.
Right.
So it broke up. Now we're hitting a weekly supply. I'm expecting a drop right back down to this original area where the institutions last filled in enough demand to take out this supply. And then once we get down to this 58 area, I'm looking to open up a basket of long positions over here.
Okay, why do you say massive? Because of the potential of this weekly breakout? What kind of levels do you think, if and when we have a breakout test, that crude could achieve down the road on an intermediate or long term basis?
Well, let's look at a 6-month chart of oil, and you'll see that we're reacting from a 6-month demand zone, and that's pretty intense. So when you react from 6 and 3-month demand zones, price usually reacts pretty aggressively. And so, if you take a look at the 6, we're looking at a 6-month bullish engulfing being created right now. So we have the potential to go up to the 70s and 80s easily. There's nothing to stop it once we get past this 6-month bearish engulf over here.
Wow.
So
yeah.
So we're testing that area.
To me, and I know you're a very good technician, by the way, Kevin. I kudos to you with your work. But I've interviewed some fundamentalist people, and I would have to say that to achieve some of those levels you're talking about, 80s or who knows, it looks like your long-term downtrend line is going to come up in the 90 level, almost 100. That there's going to be something geopolitically occurring for that kind of catalyst. I just can't see it happening with peace in the world and the supply demand, although demand is starting to outstrip supply. And a guy I've interviewed in the past actually thinks there's going to be a hot conflict with Iran. And all the stuff that's happening in Saudi Arabia over the weekend.
Right.
I mean, the prince that's always on CNBC has been arrested, and what's happening in Qatar, Saudi Arabia, and also think about it. What's the first thing that President Trump did after he got elected?
Yeah,
He
went to go visit them.
Yeah, he went to Saudi Arabia, and then he went to Israel. Okay, and then he decertifies the nuke deal with Iran. So all the pieces seem to be coming together for something like that. So I'm with you on it. And you know, people are still. I could almost make. I know I sound like I'm interviewing myself, but I could almost make the analogy that you know people are still, after what happened into the end of the year in 2015, 2016, so bearish oil because, you know, the fracking and energy independence and, you know, that we're more self-sufficient, that there really isn't a lot of ingrained bullishness in energy. You know, people talk about EVs and everything like that. So I think that would be one of the biggest surprises to the market would be 80, 90, $100 crude. Don't you?
Well, you know what? I don't know much about how the economics is going to play into the price of oil. All I do know is supply and demand, and I look at where the institutions are buying and where they're selling, and I just follow that. And that tends
that's all that matters, you know.
All that matters.
What I just talked about is great over a beer, but it's not actionable, right?
Right,
So,
exactly.
you know, I have a tendency to ramble about some of these things that are happening in the world, but you know, great way to break it down to, you know, just trade what you see and forget about what you hear on CNBC. So,
Yeah.
Go ahead.
Well, that's why I use the COT report too, is because, I mean, that's telling me exactly where the institutions are buying and where they're selling and what they're holding in positions, right? So, so that's what I do. As I look at the reports that get released every single week, and I plug in my data into a spreadsheet, and I've been tracking it for quite some time. So I can look at the positions every single week, and I can see, you know, if they're reducing longs, if they're adding shorts, or what it is that they're doing. And then I take that data and I look at the charts and I map out where the institutions are adding those demand orders, or where they're adding the supply, or where they're taking profits. And it's based off of those levels that I'm looking to get in positions on the charts.
Okay, so give us, since we're on oil, and you have the COT up there, give us a little tutorial on what supported the long side of crude, comparing commercial positions and non-commercial positions.
Okay, so
meaning like the large spec, small spec, and the commercials are the three categories, right?
yeah. So what I only pay attention to is non-commercial and commercial.
Okay.
So what I like to do, since commercial is usually hedging positions, and they're taking the opposite side of what the market is actually doing, I like to take a look at the combination of the two and get a total of what both the non-commercial and commercial are doing at the same time. So basically, essentially what I'm doing is I'm flipping the commercial long and short positions to get a better understanding of how bearish or bullish they truly are. So when I look at oil, for instance, you know, I take a look at their long positions, right? And I see that they have 734,000 positions long, and they have 231,000 positions short. So that obviously tells me that they're extremely long biased. And if you take a look at both sides of those positions, I get a calculation telling me that 76% of all of the total positions are geared to the long side.
And so this is non-commercial.
This is non-commercial, yeah. So these are the guys.
So is that a confirming factor or a contrarian factor, the non-commercial?
Oh, this confirms to me what direction oil is going to head into. So
okay.
I'm looking at supply and demand. I'm looking at what happens when price enters into a demand zone. And if I see them starting to close out short positions and start to add long positions, then that just reinforces that they're accumulating a long position, and I'm going to start looking for long setups to get in on oil.
Okay, so you give both the non-commercial and the commercial equal weighting about how they're positioning themselves. Not one is a contrarian indicator and one is a confirming indicator. Like
yeah, I don't put them on the same scale because you never know what's going on with commercials. They could be hedging and they could be doing it for so many other purposes too. So I like to focus more on what the non-commercial are doing because they are the speculators trying to make money in the direction that the markets that they think the markets are going to head into.
Okay, well that's a completely different spin than most people are taught. Most people are taught, oh, the dumb money is a non-commercial, the smart money is the commercial. And it's interesting because, you know, that I've seen the dumb money be right and the commercials be wrong. And you're right, we don't know what the purpose is of commercials positions. It doesn't mean that they're bullish or bearish, they could be hedging. So yeah, that's a pearl, Kevin. Thank you.
Yeah. Well, over the 4+ years that I've been following the COT data, I've come to learn that if you follow non-commercial and what they're doing, you're more likely going to be right than wrong. But you can't just look at the data and just buy blindly or sell blindly. You need to understand technical analysis as well to time it. And
your larger hedge funds would be in the non-commercial category.
Yeah, the institutions, hedge funds, the bank.
Okay.
Yeah, those are all those guys.
And the producers or end users are the commercials.
And corporations exchanging funds or hedging against, you know, like Starbucks would be selling coffee if they had coffee, that sort of thing.
Okay, beautiful. So great look and view and reasons and rationale. So we should be looking for the next pullback in crude to start to you know, wade into the long side of crude. Should it give us a chance back under, and this is a Brent. This is not WTI, is it?
No, this is Brent. Yeah.
Okay. So, and why the preference to Brent over WTI?
No preference. I just been always trading Brent. Yeah.
Okay. You find it a more liquid contract, better fills, etc., or just worked out that you were following Brent?
Yeah, that just worked out this way that I started trading this one. Yeah.
Okay. What else is on the radar for Magic Kev?
So what's on the radar is Aussie. I'm bullish the Aussie right now. If you look at the COT data as well, you could see that 72% of all the positions in the Aussie right now are geared to the long side. Long positions are aggressive, shorts are very cooled off based on previous size. So I'm long biased. We've got, if you take a look at the monthly chart, right, we got a nice ascending trend line here on the monthly, and price is sitting right now inside of a weekly demand zone. So I'm waiting, and this weekly demand zone, see, this is exactly what I was telling you about how I use the COT data. I take a look at this weekly chart and I take a look at this explosive move to the upside right over here.
Right.
And I look at the COT data and I take a look at what exactly happened within that explosive move. And what I was able to figure out was this is the last time that the institutions added 14,000 long positions. It was right here. So I know that last time the institutions were here, they added 14,000 long. So if the technicals are telling me that the force of prices to the upside, then once price gets down here, there's a pretty good chance that they want to fill in the rest of the demand that they didn't get a chance to fill in when they filled in this 14K. Because you could obviously see they fill in 14,000 long positions, and it causes such a thrust to the upside that the only thing that causes it to reverse is a weekly opposing supply zone, which causes it to reverse, and now it's sitting back within this area. And so I'm waiting for it to start to accumulate, wait for the momentum to start shifting, And when momentum starts to shift, I'll start getting in long again.
Okay, and your line in the sand to negate this scenario would be underneath the demand zone and trend line, which comes in where?
Yeah, exactly. Once it breaks 75, 71, I'm out. That means my
Okay.
analysis is incorrect, and they probably want to test this monthly demand area a little bit deeper and then
Okay.
wait to go up.
Okay. Really great
But
analysis.
oh, thanks.
Let me ask you this: with I kind of correlate what's happening in Aussie to what might be happening in gold.
Gold, yeah.
Is there a parallel between the two? And
There
do
is.
you kind of look at gold and Aussie as being, if not brother and sister, at least cousins?
Yeah, I do. And that's good that you brought that up, because if you take a look at gold, what do we see? We see institutions have 268,000 positions to the long side and only 75 to the short side. So their positions based on previous size in longs is very aggressive, and their
Okay.
positions in shorts is very cooled off, meaning they're not aggressive whatsoever with their shorts, and the overall exposure is 78% of the total exposure to gold is geared to the long side. So that's telling me they want to go to push price north. And right now, the only thing is that if you take a look at the monthly chart, all right, so we got this trend line here, right?
Yeah.
It's a 3-month trend line, so that's pretty intense, 3-month trend line. And it technically breaks right here with this area of demand, right?
Mhm.
This area of demand is the area that caused the break of that trend line. And so why is this important? Is because everybody and their grandmother who trades trend lines has this trend line drawn, all right? They either have it drawn on a monthly chart or a 3-month chart or a weekly chart, but this trend line is drawn. And institutions know that everybody's looking at that trend line. And institutions know that when price gets up to this trend line, everybody's going to start selling, because that's what all the textbooks tell you to do. So the institutions know once price gets up here, everybody's going to be selling, which causes price to drop. And then when it gets back up here, everybody's selling again. So the only way that the institutions can break through all that selling is to fill in so much demand that it causes all that supply to get absorbed and then causes a thrust to the upside. So that's what happened here. And this is an important area to me, because that told me that not only does the COP report support the fact that the institutions are heavily long biased, but they broke a very important trend line with this specific area. The only thing is that we didn't get a really nice consolidation away from that area, but technically we did get a little bit of a consolidation. So price has reversed back to this area. That was the spot that broke the trend line. And now what I'm waiting for is just some good confirmation to go long. So right now, I don't see any really good confirmation yet. I'm waiting for some strong demand to come in on the daily chart. And when I see some strong demand come in, then I'm going to start to make my move. But looking at gold, I see all the signs that they want to take it up. And looking at Aussie, I see the same signs.
Okay. Excellent presentation. So the big question now in currency markets is the dollar or the euro, which are pretty much the same thing. So we could go either way. So it looks like you want to look at the dollar. Okay. So the dollar peaked at 104. We have this big break all the way to 90. We've had a nice recovery. A lot of people down at the 91 level or so were saying a bear market rally at least to 97. But yet there are some Elliottians and bulls that say that there's a new high coming above that 104 area. I'm starting to think that the dollar is starting to run out of juice up here. I'm looking for like 95.5 to be taken out first, and then I'm going to be looking for short positions. And it looks like on your last chart, you kind of are looking for the same thing. What's the COT data and your technical work saying about the state of the dollar? Is this more likely a bear market rally, or was the low that we had back in September the beginning of a move to new highs? What's your best guess on that?
So the US dollar is very tricky Very, very tricky right now. So if we take a look at the 3-month chart, what I could tell you is that we hit a 3-month supply zone. I think last time I was on with you guys, we were reacting from this 3-month supply zone, and
Right.
price is
That was
dropping.
a great call.
Yeah, thanks. See, 3-month supply right here. Here's the line, goes right back here. So if we go to a 3-month chart, here's the area of supply. So price dropped, consolidated, and dropped. And so we brought it up in the discussion, well, is there still supply there? Like, what causes price to drop from an area that existed back in 2001? And like I said, I don't know if there's supply or not, most likely not. I mean, this goes back too many years, but you know, there's no doubt that we could see price reacted to it, right? So price is reacting to the downside from a 3-month supply zone. What typically happens with supply and demand, when price drops from an area of supply like this, it usually will drop until it hits a 1 time frame lower demand zone. So 1 time frame lower from 3 months is monthly. The only thing here is that this was not demand. The only demand zone here is down here on the charts at 87. And so we haven't even hit that yet. So so it was free falling, and now it just stopped in the middle of nowhere and started to reverse. Well, here's the thing. Here's an interesting thing with the US dollar.
Before you leave the chart, bro, what are the green dotted lines underneath the recent low that we had?
Oh, right here?
Yeah, what are those?
Oh, that's a representation of a weekly demand zone right here.
Okay, so there's weekly demand around the 90 level, 89 level.
Yeah, but that's not going to stop anything.
Okay.
The only what's stopping price right now on a 3-month chart, which I don't have represented here, is the 3-month 20 EMA. Okay, there's a 3-month 20 EMA right now that's hitting that. That's causing price to move to the upside. But let's take a look here. If you look at the COT data, so here's the thing with the COT data. It's very tricky to read because, you know, back in April, we were extremely bullish, the US dollar, with 93% of the overall exposure being to the long side. Right. Since then, they've really switched from 93 to 80 to 68 to 52 to 45 and now to 49. So even though the institutions, you know, 49% of their overall exposure is geared to the long side and 51% is geared to the short side.
Pretty neutral.
It's very neutral, but, you know, after studying the COT reports for some time and doing a lot of meditating and thinking about things, I came up with this coloration of my Excel spreadsheets, which take into consideration previous position sizes and because if the institutions are heavily long biased, when we hit a supply zone and they start to become bearish, they can't switch from being heavily long biased to extremely bearish overnight. It takes months to do that, right? So I started to come up with a way of colorizing my cells based on previous figures to give me a more accurate representation of whether the institutions are starting to become bearish or starting to become bullish. So based on all that stuff, you know, I take a look at the coloration of the cells here, and I see that even though longs and shorts are pretty much even, longs are still considered to be very cooled off considering where they used to be just very recently. And if you take a look at shorts, the colorations of the cells here are red, which tells me that they're still very aggressive short, all right? So they're still very aggressive short. This pullback up right now is, you know, heading right into a downward trending 20 EMA.
Okay,
and so
where's that coming?
Yeah, so we're pulling back up to that like 50% retracement mark.
Is that about 95 and a half, that EMA?
Yeah, that's about where it is. And there's a wonderful, wonderful, beautiful weekly supply zone sitting right over here. And once weekly supplies get hit, price reacts to them.
So between 5.5 to 6.
Yeah, 95. And 95.34 is where that weekly supply hits. Okay. So I'm expecting price to drop. The only thing is that when it gets down here, Dale, there's a weekly demand zone here.
Right.
So price is going to head back up.
Okay. Interesting. You know what, Kevin? You know what? Another great interview. But I have a theory that keeps on being proven, that the best traders are not necessarily the most famous traders. They just make money. Not always, but usually. And you're not, and you fall into that category. And I don't know how or why we met or how I ever, picked your name off of Twitter, but thank you for proving my theory once again.
Thanks, Dale. I'm honored. Thank you. Appreciate that.
Yeah. So, I mean, every time you're on, I have areas that give me ammunition and intelligence gathering for me to consider in the days and weeks ahead. And for you just to step up at the last minute because I couldn't reach a guest is also commendable. And I really appreciate you being a great pinch hitter. You're a very talented technician, and appreciate you edifying our community today, my friend.
No problem, Dale. Anything for a friend.
Okay, bro. So everyone thank my trading warrior brother, Kevin Araijo, and you could also follow him at Magic Kev. Magic Kev is M-A-G, not J, M-A-G-I-K-E-V. He's an excellent follow. And you don't even have an axe to grind. You're not teaching. You're not selling signals, anything like that.
No, just out to help people.
You're just making a living off the market.
You got it, sir.
All right, buddy. Well, congratulations on doing that. A lot of people dream about being able to do that. So congrats, bro, and thank you for all the great looks in oil, in gold, and the dollar as well. Appreciate it. Thank you for giving us some ammo.
Thanks, man.
Okay, everyone. Okay, buddy. I'll keep in touch.
Yep, will do.
And also everyone, that's a wrap. Special guest tomorrow, CNBC contributor Peter Bookvar will be with us. It's going to be interesting to see what Peter says about the dollar. He was a dollar bearer, so we'll see what he has to say tomorrow. I want to thank Blake and Steve and Stelios and all the great questions that you guys gave us today. And remember, don't just count your pips, count your blessings. See everyone for Turnaround Tuesday. Good hunting. The rest of you cannot find the Twitter feed. Again, it's Magic Kev, or it's MAG-IKEV at Magic Kev. See everyone tomorrow. Adios, my trading warrior brothers and sisters. See you in the other trading room. You're welcome, Humberto. Okay, Ash. Adios. Thanks, Kev.